Hello, friends. So, we have ended with one more big and fat positive week on the Wall Street. Although the last day of the trading session was indeed been red, but if you're looking at the overall week, you can see big gains that the index has given, and obviously, NASDAQ has performed quite well and it has actually over exceeded the expectation. But the developments that has happened, the recent news will set the course or the tone for the next week in the Wall Street. And let me tell you, this is going to be very important for next week and probably the weeks to come, because the next week will definitely set the tone for the market. So listen to this analysis carefully. So let us start analyzing the markets and let us see what is happening in the Wall Street. So I welcome you all to another session of USA Weekly Market Report, and this is very special because this is the 100th weekly report. This is have been publishing this report for the last 100 weeks, and this is the 100th video on that series. So I'll thank you all for your support and cooperation, and I hope that you are liking my analysis. So if you do, as then share, like and subscribe to my channel, and also share some thoughts with me, and what are the things you require in this analysis as an add-on. So let us see what is happening. As I have said, tech stock just finished a 5-week rally, the longest stretch since market peak in November 2021. We will discuss about this. Apart from that, US payroll increased by 517,000 in January, crushing estimates as unemployment rate hits 53-year low. Now this is very important. Focus on this headline very carefully. It will have an impact because it simply means that the interest rate factor, if you are thinking that Fed is very close to the terminal rate, probably it may or may not be a scenario kind of situation, because right now a good number is bad for market. Whether it is good for economy or not, that's a different thing, but it will definitely not good for market. Apart from that, because I find that there will be less news. So Jim Cramer says strong January report shows the economy can handle more rate hikes. So that's what I have just said. Apart from this, world's biggest pension fund loss in longest losing streak in 2 decades. So there is the correlation that you can see in the stock market, in the economy, and then in the money management is telling you a completely different story. Treasury yields leap after much hotter job report than expected. So you can see things can move very sharply. Bond markets nowadays are trading like stock market. You can make some quick gains over there. Apart from this, I don't know whether China's real estate crisis isn't over yet, IMF says, but the problem is we don't have data about that economy. So how it is reacting and what will be the impact, so things are not coming out. So this is something which we will know someday. Things will happen and everybody knows something, so that would be the kind of scenario. Obviously what I am thinking is quite disastrous, but when we don't have any information and suddenly you get to know that there are no import and export and there will be a drastic fall in the data, and suddenly the world wakes up and see that things are not at all good, these kind of scenarios, because whether it is good or not, nobody has a clue. Whatever number they are releasing, world is blindly follow those numbers. So that is the kind of irony we have. Okay, it does not matter whether they are right or wrong. So I don't know why we are giving so much impetus to that economy or to that data, when US as a market leader get criticized for their data and their economy. Why not China? Why they are hiding their numbers and still everybody accepting it? Anyways, let us see what else we have as far as the No, so we don't have much to talk about. So let's jump into the market and let us see. So the last day of the week was indeed a negative one. Dow Jones down by 128 points, NASDAQ down by 193 points, S&P down by 43 points, gold down by 53 points or 2.75, oil is down by 2.65, yields as you can see up by 0.12, and VIX is flat, we can say, more or less. Apart from that, there is nothing much to talk about as far as the commodities. We will definitely discuss about commodities, whether it is gold, silver, or oil. But overall, it is on the downside. As you can see, natural gas down by, nearly 3%. Then RBOB gas 5.28%. Then everything is down and out. Yeah, the thing which are increasing is obviously the yields, and you can see 1 month yield is 4.5 and 3 month yield is 4.6. Now this is the kind of money you are getting if you're simply putting your money for 1 month. If you're purchasing treasury, you can get an yield of 4.5%. There are divided views on the inflation, beg your pardon, the recession, but still the bond data is still indicating, this is my feeling, that recession will happen because job numbers are good, and somewhere down the line when jobs are good and Fed will continue to increase rate, whether the commentary will be a hawkish or bearish, that's a different thing. But if economy is good, and they will definitely keep on increasing the rate. So somewhere down the line, if things has to move higher like this, obviously accident will occur. Now what will be, whether it will be a small one or big one, that's something we need to look at. So right now the situation is like this. If it will change, obviously, then we need to change our analysis accordingly, but indications are not there. This is, you can clearly see the way the data looks like. It is an inverted yield curve kind of a pattern that we have here. Apart from that, dollar index started rising, so it closed this week at 102.99. Okay, so this is very important, and this week I'll start my analysis with dollar index, because dollar index will set the tone for the Wall Street in this upcoming week, and I think in next 2 or 3 weeks to come. Okay, so be very careful about the market, and just watch this analysis very carefully, because it will set the tone not only for the next week, but I think for this month, for the month of February, unless market behaves in a very random manner and things change very fast. So that's always a thing in the market. So let us start analyzing the dollar index, and this is the dollar index. Now dollar index hits the low of 100.82 and closed at 102.99. Okay, or 102.92. So it's nearly 2.15% movement as far as the dollar index is concerned. Now the problem over here is, and I have been talking about this for the last couple of days, you can see the indicators, whether you're talking about the daily indicators or the weekly indicators, they are highly oversold, and we can now see price movement, because market, no doubt, there has been a recovery, but that recovery, whether it is enough or not, that's something which we need to look at. Right now the way dollar index is behaving, it has already impacted all the other relative financial instruments, and it has already been started. So if you don't know what has happened, you can clearly go and check. Right now I don't want to stretch myself beyond a certain point, but you can have your stop loss at 100.76, and the target that we are looking here as a retracement will be in between 105.7 and 105.9. So this is something which we are looking at as far as dollar index is concerned. And this much movement, if it moves, if it has to move nearly 2.7%, obviously it will have an impact. And there is also an extended target. Okay, it's not only about 105.9, there is also an extended target, in which case the dollar may extend or fly up to 108. So this is something which at least I am looking at, because the dollar index is clearly oversold and now it has started moving higher. So for the next 2 or 3 weeks it will have an impact, until and unless the upside fizzles out. So be very careful about the market, and you can see the similar kind of or opposite moves that has already been started in commodities, uh, in equity market, even in cryptocurrencies, because dollar will impact everything. Now the next one will obviously be Dow Jones. Let us see how Dow Jones is behaving. And Dow Jones is definitely trading at the crossroads. This is very much clear if you are looking at the price chart of Dow Jones, because I was looking into it, and you can see the way the trade sets up for Dow Jones. And Dow Jones is trading very near to the resistance level. It is actually trading at the resistance level. So if things works out, then fine, and if it does not, then obviously be ready for a downside. And the way the trade sets up, we have a resistance at 34,320 as far as the upside is concerned for Dow Jones. But right now you can see the setup, and the level which one must look at is 33,120. If Dow Jones falls below 33,120, let me tell you, downside will definitely open up, and the kind of volatility we have in the market, the support level which we are going to look at will be 30,184, 29,661 and 28,984. You may think that you have said dollar index to move 4-5 points, and you are saying that the Dow Jones will fall by 3 to 4,000%. It's all because of the volatility, because the entire range opened up. Okay, Dow Jones, if you can clearly see, this is trading in between this range. So if it does not hold on to its resistance, or if it does not successfully breaks above the resistance and sustain above it, downside will definitely open up. So the important level to look over here is 33,120. Be very careful about it. Talking about the NASDAQ, NASDAQ has indeed performed superbly, I would say. And why I am saying this, because a range breakout has happened even in the longer term time frame. Okay, even in the longer term time frame, the range breakout has happened, but volatility will never fade away. That's not going to happen. So be ready for some volatility. As you can see, this has been a range for the last couple of months in Nasdaq, and as an index, the Nasdaq has fallen quite a lot, and we have seen a severe kind of damage as far as the stocks are concerned. But a breakout has indeed happened above 11,400. But still, because the market setup is different, what we are going to look at is the current range, where we have 11,400 as your support, or rather use this one, 11,200 as your support on the downside, and 12,340 as your resistance. If only Nasdaq sustains above 12,340, then we will move towards 13,200. And if Nasdaq falls below 11,200, then obviously the downside will open up. Let it be very clear. Okay, it's not only about because the range breakout has already happened. That's a different thing, but the actual test will happen maybe right now, because it is the test whether Dow Jones is holding holding on or sustaining on to its levels. So that is very important to look at as far as Nasdaq is concerned. Simultaneously, if you are looking at S&P 500, which will give you a cumulative impact, S&P 500 looks something like this. There is also a range breakout, and probably you can clearly see a range breakout, and this is a clear impact of Nasdaq, how Nasdaq behaved and how S&P 500 behaved, because the biggest of the companies are listed in Nasdaq. So right now the resistance that we have here for immediate resistance is 4,200, and big support at 4,000 on the downside. make sure that NASDAQ, S&P 500, beg your pardon, is not moving below 4,000. Otherwise, the downside will open up, and next support will be 3766. And only if NASDAQ sustains above 4,200 again, then we will move towards 4,300. So things will become wait and watch kind of thing, but the dollar index will drive the market, because if there is 105, 107 or 108 is on the cards, then obviously market will see volatility. Now how big that could probably be, that is something which we need to look at as far as the overall market is concerned. Also, let's start talking about WTI. I have talked about WTI and I have said that it is indicating a downside, and you can clearly see in the last 1 week the WTI crude has actually moved lower. So it is good for companies, those who are commodity users, not commodity producers. But at the same time, I mean, there is no supply and demand kind of thing, more driven by geopolitics. But anyways, the thing is, it also reflects that demand is slowing down. So this is about the fundamental fact, but whether that will work or not, that's a different thing. So what we are looking here as far as WTI crude is something like this. So with a resistance of $82, WTI is moving towards 65. So this is very good for those who are importing crude. This is very good for those, because right now it closed at 73 and I'm talking about 65. So $8 cheaper per barrel is a very good deal for importing countries. Okay. Also, let's talk about gold. And gold is giving you a perfect trade. Gold is literally giving you a perfect trade, and I've been talking about gold since 1650, 1680, and right now it looks like that the trading bets, one should take off all the trading bets right now, because it hits the upper end of the range and started falling lower. And simultaneously we have started seeing up moves. If you are watching my videos, I have said this thing in my previous videos, that dollar index is indicating an up move, which means every other asset which are inversely correlated with DXY will go down. So again you will see a move towards 1760 and 80 as far as gold futures are concerned. It hits the high of 1970 and now moving towards 1720 and 1680 as far as the lower end of the range is concerned. Talking about silver, you will see similar kind of things as far as silver futures are concerned. Yeah, now you can see how silver futures is moving, and it perfectly hits. And I'm not talking about the big trend. These are small trends, because we are analyzing market on weekly basis. So obviously there are some limitations to this analysis, because we are analyzing ourselves or recheck our analysis on every week. So the support which we are looking at for silver is in between 18 and 17, and simultaneously a breakout will only happen beyond 25.5. So everything which is inversely correlated to dollar has already started falling down, and what is going up are dollar index and simultaneously yields. Okay, so as you can see, this is the 10-year yield, and it is somehow holding, and you can see this is the 10-year yield, and it is holding on to its levels. So you can clearly see how yields are holding on to its levels, and here we are on the downside. We have 3.4% for 10-year yield, but if it moves, if it sustains or continues to sustain above 3.4, then the levels that we are going to look at will be as follows. Okay, and which are 3.9, beyond which it will again move towards 4.27 and 4.33. Now there is one more thing which I think I should discuss with you. I don't generally go into that part of the analysis, but it does, because when I scroll down each and everything, okay, when I scroll down each and everything, I'm not there is no major highlight of the geopolitical crisis between Russia and Ukraine. so it is not there. But if it pops out suddenly again into the market will start feeling dizzy again. Okay, so it's gone, but we are not out of the woods, because if there is something new development which will pop out and which we don't know yet, then obviously it will create dizziness and it will create volatility into the market. So consider that factor as well. The economy is good, which means we will move higher as far as the interest rate is concerned. Now, when again some geopolitical pressure comes in, it will make the market as well as the economy fragile. So it will be the double whammy. So this is just an additional input. If you want to consider this or not, that's a very different thing. But this is what I find, that we hardly have anything which, yeah. So this is, Germany announces more tanks for Ukraine. So this is a very small headline, but the thing is, we are not out of the woods yet. I just hope and pray that everything, sorts out as soon as possible, and things will not get worse from here. This is what I am expecting and what I am analyzing. But if you are looking at the overall market scenario, it does not look good. It is, I mean, if you have made some money, take your profits out of the table if you are a trader, because market sentiment is changing and changing very fast, and either we will go short, or we will be in a wait and watch kind of mode from next week onwards, because dollar started moving and market started going down. So this is the end of the video. Thanks for watching.